corrected quite a bit. It's down almost 35%. And the CEO recently said that Google's anti-competitive activities are harming Indian consumers and the economy. He said that Google has made it impossible for alternative apps like Maps to proliferate. And to discuss this competitive environment and how business is shaping up, we're joined by Rohan Verma, who's the CEO and Executive Director at MapmyIndia. Rohan, thanks for joining in. I don't know if you had a chance to listen into what Dipan was saying, and he's been a long-term investor in your company. He's disappointed with, the kind of operational performance that you've delivered. And if you look at the last, say, 4-5 quarters, I mean, your margins at one point in time used to be about 46%. It's come down to sub 40% now. What's going wrong? And when do you think you could sort of, get back to the levels that you've seen many quarters ago?
Good morning, Sonia, and it was nice to hear his comments. I think we've explained this well with the previous quarter's earnings. Margins in the core business is actually up to 55%. So I think our core business is doing quite well. And we're investing for significant future growth with this IoT acquisition, logistics and fleet management SaaS acquisition of G-Tropy, which is device-led. So the market opportunity is really quite large, as he said, with new products, new markets. The true opportunity for the company will grow. And when you invest in a new business, there will be a gestation period. So I think we are quite convinced on, as he said, both the long-term story as well as the medium-term and short-term story. And the market should keep looking at how, what all we are doing in terms of kind of growing revenue, but also investing for future profits.
Good morning, Prashant here. I remember when around the time of the listing, this is, I think, January of this year, right? When you came to the market. I remember maybe around the listing time, we had a conversation, and I was talking about competition from Google, Google Maps primarily. And you were telling, I remember you saying that they operate in a different segment and they're not a threat, etc. So could you explain what is the charge now in terms of anti-competitive behavior, as you were saying the company is indulging in?
Right. Good morning, Prashant. Actually, yeah, this is still true in terms of B2B and B2B2C markets, which is what we explained in our IPO, where we are the market leader. That's not a place where we are letting Google kind of monopolize the space. The space that we had seeded 10 years ago or 15 years ago, where we were also the market leader, was consumer market, B2C, which is what Google has for the last 10, 15 years made it impossible for a company like MapmyIndia, which was the market leader, to become a consumer tech leader as well, besides the B2B and B2C market. Now, Competition Commission of India and the Parliamentary Standing Committee have come out with scathing judgments of what Google has done. And we're pushing the accelerator now to have a rightful place as a consumer tech leader as well. So besides B2B and B2B2C, we want to open up the market for MapmyIndia on the B2C front, for people using our app, Mappls app, accompanying consumer gadgets, Mappls gadgets. And that can only happen if we raise our voice against what anti-competitive activities Google is doing on the consumer, while on the B2B and B2B2C front, we continue to do strong and deliver growth.
That was always expected, right, from a competitor as strong as Google, with the ecosystem that it has, with the market share that Android has in smartphones, etc., that they would obviously try to leverage that. I'm just trying to understand what is it that they're doing which is, according to you, anti-competitive. That's point number one. And secondly, on consumer tech and enterprise C&E side as well, I mean, the first half you saw a growth of just 29-30% as against the 40-45% that you would grow earlier at. I mean, what's causing the slowdown there?
Yeah, good morning, Mangalam. Actually, I wouldn't confuse B2C market with what we call C&E, Consumer Tech and Enterprise Digital Transformation. That's still part of our B2B business. So the status quo has been there for 10, 15 years. What you said on consumer B2C market, with everybody who uses Android is forced to get Google Maps preloaded on the phone, and hence that's the default app choice that people take. What has changed significantly is actually something in favor of MapmyIndia. The CCI judgment, the Parliamentary Standing Committee, seeks to change the status quo where Google cannot force OEMs to preload Google Maps forcibly, or cannot do these anti-competitive activities which stifle other consumer apps like MapmyIndia, which are competitors to them. So actually, if these things play out well, the way that the momentum is looking, you will see a whole new opportunity for MapmyIndia open up around direct to consumer engagement, not just the B2B and B2B2C space. So that's on B2C consumer and Google. On CNE, like we've always explained, look at us on an annual basis.
Yeah.
And the order book and revenues are lumpy there.
Right.
So let's give it Q3 and Q4,
Right.
and we'll see how that plays out as well.
Okay. Q3 and Q4 will be much better, you're saying?
We are quite bullish about it. Our order book has been strong, as you know.
Okay.
So
on the direct to consumer, I mean, Google Maps is free, right? So even if you are able to get a foothold there, I mean, do you plan to charge for those services? How will that work?
yeah, so MapmyIndia's app called Mapples, and I highly encourage everybody to use it. You'll see many more features, much better maps on Mapples, MAPPLS app. It's free. It's free to use. The business model is multiple. There are subscriptions we charge for gadgets, such as dash cameras in your car, which give you safety for your loved ones, or GPS trackers. So that everybody who buys the gadget pays a subscription to us from the consumer base, as well as now with Kogo's acquisition or investment, there's a lot of transaction or travel commerce, hyperlocal commerce activities that we will begin. So there's a good business model around it. And that's why we're pushing for our app also to get its rightful chance in front of consumers.
Since we're talking about competition, Rohan, wanted to ask you, is What 3 Words a big competition for companies like yours? I mean, it's that London-based company that has this geocode system as well, where you just identify a location with a resolution of around 3 meters. So that seems to be the new thing everyone's talking about. Will that hit you in any way?
Yeah, no, Sonia, it's not at all competition. What 3 Words takes a grid and gives a latitude, longitude. You can't really use it meaningfully. It's also not a replacement for MapmyIndia. It's an add-on where they actually ride on where MapmyIndia's maps are in OEMs and provide an additional option for people to search for. They themselves have said that they are not competition to us. So we have something equivalent also called Mapple's PIN, which is a 6-character code, like a PIN code, but to your doorstep. And it tells you the flat number, floor number. So we have a much better solution.
Okay,
and this is just somebody doing marketing.
Sure. So I just want to, one final question from my end. Since there's so much competition, we also noticed that your marketing expenses have gone up. I mean, it's now 5% of your revenues, almost 4 crores of marketing expenses last quarter. Do you think you will have to escalate it further because of the competitive scenario?
So what we've said is, look, we do have operating leverage in our business. We have a strong contribution margin. And as I said, the core business operating leverage, even despite this growth of marketing spend, was up to 55%. We want to calibrate our marketing awareness of our brand. I think this is the one thing that, if more and more people knew about MapmyIndia, knew about Mapples, that would have a very strong impact on our business. We are still not scratched the surface in terms of reach and potential. So we will calibrate our marketing expense based on kind of what targets we have in mind for profitability. And good thing is we have the operating leverage and a growing order book to support that investment.
Quickly, before we let you go, just a couple of numbers. What is your current order book? You started with just around 700 odd crores?
So, I mean, these are annual order book